Hello and welcome to Market Today. I'm Siddharth Zarabi and joining me today is Dr. Praveer Sinha, CEO and Managing Director, Tata Power, on the first quarter results. Welcome to the show, Dr. Sinha. Let's begin by getting your sense on the overall quarterly performance and the key highlights.
Thank you, Siddharth, for having me on your show. I think what you have seen that Tata Power has been consistently performing very well. This is the 23rd consecutive quarter of increase in PAT. And what is important is that now most of the profit that is coming from the core business. Our existing generation business are performing very well. Our transmission distribution business have stabilized. Our Odisha discoms have done exceedingly well in this year, and whatever legacy issues were there, we have been able to overcome, and you will see much better performance in the coming quarters. Similarly, in our renewable, our manufacturing plant has stabilized, and you will again see much better results in the coming quarters because the impact of better yield and better efficiency can be seen. Our rooftop business has again done exceedingly well. The type of quantum jump you have seen over there, you will continue to see in subsequent quarters because the supply chain, as also the ability to penetrate the market and get larger market share is there. And of course, it is being helped by the PM Surya Ghar program. And then our large utility scale, we've set up 652 megawatt of capacity in this quarter. Of course, most of it was for third party. But going from third will be for our own internal purpose because our third party projects will be virtually over. So I think you have exceedingly good results that will come. And this is on a very, very strong foundation that has been laid by each of the businesses. And there will be much more consistency in performance and improvement in performance that you would see going forward.
Dr. Sinha, if we look ahead in terms of the EBITDA outlook for the first half, what can you share with us, especially when it comes to renewables and the EPC segment in terms of the outlook?
So first quarter, we showed a EBITDA growth of 17%. We do expect that this consistency will be maintained in future. As I mentioned, that many of our performance in whether it is Odisha discom or rooftop or manufacturing will increase much more in the second quarter and subsequent quarters. So you can see exceedingly good results coming out of Tata Power in subsequent quarters, and the trend and the track record of it will only be improving, and that's what I feel you can expect from Tata Power's performance in future.
As far as the solar part of the business goes, 100 crores in profitability on almost 1613 crore in revenue. Can we expect this to sustain as you ramp up towards the full 4.3 gigawatts of capacity?
So this is for the manufacturing plant in Tirunelveli, the 4.3 gigawatt solar cell and module. Last quarter, we made something like 940 odd megawatt of modules and 905 of cell. This quarter, I expect that this will improve. So you can definitely expect a much higher profitability and EBITDA from the manufacturing plant in the coming quarter.
You mentioned Odisha, and Odisha, the discom part has shown strong EBITDA and PAT expansion. What is this on account? Is it on account of AT&C reduction alone, or is there anything that you managed to do as far as the PPAs are concerned?
So it is basically because of the AT&C. It's a regulated business, and if you perform better than what is the target that has been given by the regulator, you get an incentive on that. So our AT&C performance has been very good. Legacy issues have been sorted out. Billing and collection efficiencies have improved tremendously. All the issues of meters not working earlier and all that, they have been removed. So I think you will end up seeing a much better performance from Odisha Discom every quarter and on a yearly basis also. And that's where I think the real value of the investment that has been made by Tata Power in Odisha Discoms will be seen.
Dr. Sinha, you mentioned the solar part, and you've been ranked the number one company, solar rooftop EPC company. I wanted to understand what are your market share targets for the remaining part of the year in this particular segment?
So in rooftop, we are number one. We have a 20% market share. On EPC, of course, there are other players also, and we have been little cautious in terms of bidding for projects and executing. But this year, we are definitely looking at executing nearly 2,500 megawatt of renewable projects, which means a combination of solar and wind. And we are very much on track to do that. This is going to be the highest capacity that we'll be executing till now. Even in the first quarter, 652 is the highest quarter capacity add that has happened ever in Tata Power.
Let's also turn to another aspect of the business, and this is your public charging points. Footprint of almost 5,571 public charging points across 620 cities. The question I really wanted to put to you was, in terms of monetization from this network, what are the plans? Is there anything on the board with regard to possible partnerships with fleet or aggregator cab operators?
So we are the biggest in the country in terms of availability of EV chargers. The numbers that you mentioned are public chargers. I have nearly 1.4 lakh home chargers and 1,200 bus chargers which are there right across the country. And we are looking at opportunities to enhance that. As you know that the number of electric vehicles that are being sold are still very low compared to what was the target. And we do expect that once the penetration of electric vehicles increases, more chargers will be put right across the country, and the usage of chargers also increase. Right now, it is less than 5% usage, and we expect that at least at 10% it will become financially very viable to increase the numbers right across the country. So that's where we are. We are quite optimistic that the OEMs who are coming over here have all tied up with us. We are working with virtually all the OEMs, including Tata Motors. And we do expect that we are the partner of choice for all the EV suppliers. And we will be able to add more capacity in the coming years.
That's a good point to make. A doubling of usage, as you say, will be required. On a broader basis, what's your own sense of the evolution of the EV market in India? We have government initiatives, we have seen what industry is doing on its own, and we are also now seeing the play out of market restrictions, supply restrictions by China. We've also seen Tesla showroom, perhaps just in terms of a symbolic entry into the Indian market. What does this all add up to for the future growth of the EV market in India?
So what we see is from the earlier only 2 OEMs or 3 OEMs, now there are 7 OEMs who are there. Also earlier there used to be just single model of EVs that were there in the market. Now we start seeing that there are number of new models of EVs which are coming into the market. They are SUVs, they are sedans, they are hatchbacks. So I think the numbers are increasing. We do expect that between this year, later part of this year and next year, there will be more number of models of EVs which will come, and that will give choice to the customers to go full hog and decide on what sort of EVs that they would like, and to that extent the penetration of EVs will drastically increase going forward. So we are very confident that the groundwork that we have done in last 5 years, the infrastructure that we have created, we can quickly enhance the number of chargers that needs to be added, whether it is in cities or it is in highways, and we'll be in a much better position to cater to the requirement. So from the charging point of perspective, I can tell you that we are fully geared up. If the number of vehicle increases, we can very quickly enhance the number of chargers.
Dr. Sinha, let's turn to the hydro projects in Bhutan. I just wanted an update on where that stands, because there is in fact construction that is expected to have already started or is set to start. What's the latest update there?
So Bhutan project, the construction work started on 1st January 2025. So already it is in very advanced stage. Full mobilization of equipments have taken place, mobilization of people have taken place, and work is going on all the fronts, whether it is the powerhouse or the adits or the diversion tunnel. So there is full-fledged work happening at the site at very fast pace. This will get completed by 29, and we are very confident that we'll be able to execute this project, one of the fastest in the in Bhutan in the power sector. We are also working on few more projects in Bhutan, where we are in very advanced stage of discussion with the Bhutan Power Corporation, which is the DGPC, and also this will get financed by World Bank and IFC. So I think another 1125 megawatt project is in very advanced stage, and possibly by mid of next year we'll start construction work over there. And similarly, our pumped hydro project work has started. So we have a battery of hydro and pumped hydro projects which we'll be executing in next few years.
Dr. Sinha, net debt has risen to 47,578 crore. I just want to understand for the full year, what kind of number are you working with, and are there any plans as far as possible refinancing of this debt is concerned?
So right now, all these projects which we are doing, we have a plan of 25,000 crore of capex. Part of it will be, of course, funded from internal accruals from the EBITDA that we are getting, and part of it, of course, will be funded from the fresh debt that we will take. And all this is tied up. What is important is to see the metrics. Our debt equity ratio continues to be less than 1.1. Our debt EBITDA ratio is also very, very healthy in the 3.1 range. So I think when you look at the metrics that we have, they are very, very healthy. And I do expect that going forward, we will be able to meet not only very good cash flows, internal cash flows to meet the obligation of debt repayment, but also fund our growth. So I think financially we are in a very good metrics, and that will support us in the growth plans that we have.
Okay, let's move away from the results for a moment and talk about the broader sort of overall signals that are coming in, and one of those is the tariffs that the United States is going to put on Indian exports to that country. Broadly speaking, not for your sector but overall, how do you see this as a moment for Indian industry and our exports growth?
So let me talk about my industry, and from what I see, this is a great opportunity for India to make in India for India. If I look at renewable today, whatever capacities we have put in cell or module, we'll be able to meet our local requirements. So we don't have to export anything because the in-country demand itself is huge. Similarly, going forward, I think anything that we take in power sector, the sector is growing at a very, very fast pace, and the type of demand we are expecting for next 10-15 years, we actually do not have to look for too much of export opportunities. So my feeling is that whatever be the tariff ranges which are there, it will not impact for the power sector in our country. And let's work towards making India for India.
Make in India for India, and that seems to echo what Prime Minister Narendra Modi just said over the weekend, which is to look at self-reliance in a world that is currently in turmoil due to tariffs. But broadly, we see the United States as the largest market in the world. There's an anti-renewables flavor currently. We don't know how much it will impact on the ground, but the policy focus there seems to be anti-renewables. Do you see that impacting the move towards renewables globally and therefore impacting international prospects?
I think from what I see in our country, this is a great opportunity because we have more than 300 days of sunshine and we have very good wind speeds. And the opportunity of democratization of energy and using clean energy is humongous for our country. We should look at it from that perspective, and I strongly believe that this is the decade or next few decades for India in terms of moving towards clean energy, especially the type of growth in consumption that we are seeing. And for us, there could not have been a better opportunity for us in Tata Power and the people working in the power sector to make the best of it and enhance our manufacturing capacity as well as our capability to add capacity for generating more of clean energy.
One final question. Is there any policy response that you would like to see on account of these evolving developments, particularly in this space, to utilize this opportunity as you put it?
So I think the government is taking a lot of steps in that to promote Indian manufacturing. Also, the step that the government is taking on nuclear power, whereby it will allow private sector to get into nuclear power generation, as also in setting up nuclear power plants. So I think that's another great opportunity for India for its movement towards clean energy solution. And I do believe that this will be a game changer as far as India is concerned in its journey towards clean energy solutions.
Absolutely. Dr. Sinha, thank you very much for your time with us today, taking us through key highlights of the first quarterly performance and also taking broader questions on the impact of the recent tariff related changes for the renewables sector. As always, thanks very much. With that, we slip into a short break. We'll come back with more coverage on the markets. Do stay tuned in.